Hi guys, how are you? Vladimir here, and this is the live market review, 2nd of August 2017. The market is getting ready for the non-farm payrolls. We can see that on many of the pairs, the market is trying to reach the edge and take it, well, a bit more to the critical levels. Make many traders to give up, because when a pair is reaching a level, so many traders trying to catch the edge, or as we can call it, catch a top or a bottom, right? And failing, break even in, it doesn't work out, the market not moving, and then the trader normally give up. And in that cases, that's what the market is trying to do, to clear and clean all these levels from the intraday's attempts. And once the weekly and daily cycle are ready, that's when things about to happen. So let's go over the charts and see what I am talking about and what are our best opportunities. Let's start with the Aussie franc, a pair that we have mentioned. We have here two false breaks. Just change the color of the pen here. Two false breaks, which are better seen on the 1 hour chart, of course. And we got a convergence there as well. It was pretty nice one. 1, 2, right? And we got this beautiful movement and retrace to the 50% right now, and creating a bearish hidden divergence right now here. Now, in such situations, normally we would expect a fast reaction to the downside. But what happens is the market is saying, hold on, maybe, just maybe, that's even not the area. Technically, we have the setup. It looks amazing because we have here 161.8 of this, and we have here the 61.8. The duplication of this. Now, it took us exactly to the place we want. We have a bearish divergence here. It looks really good. So that sell makes a lot of sense. But on the same time, as much sense as it does, there is always a chance that this is just a range. So before one more high. Now I do want to remind you that according to the weekly chart, we do expect to reach even higher, which most likely it will. But if we can get this second leg down to ideally below 0.76, maybe even below 0.75, we can then look for heavy buys. And this is why this short-term sell technically is correct. Now let's talk about the next one, which would be the dollar CAD, another pair we have been talking about for a while. And one of the options we had yesterday is range, right? You remember this scenario. And the next one was a possible beginning of a ride. Now, if during the coming candles we will get this breakout, then there is a very good chance that this pair is going all the way to 126.20 up to 127 to make that scenario happen, where from I would expect some kind of correction and then one bigger push to happen. If it does not make this breakout up as I want, then there is a chance we are going all the way to the previous low according to this range. So we have to keep an eye here closely and see. Now, those of you who are long, it would be not bad idea to go break even, so to make sure you don't lose in this trade, whatever happens. New Zealandian dollar is another pair that we had following for a while, broke the last trend line and begins the down move. It looks good, and like we can simply say that as long as the last stop holds, we expect a continuation down. In terms of convergence, we don't have any as for now. We don't have it here. So the only scenario that would be acceptable here would be 1, 2, 3, 1, 2, and 1. For those who are not in and do want to play that setup for me. Next one on the list, Aussie versus the Kiwi, broke the last trend line and making the beautiful movement to the upside. And from my point of view, while this low holds, bullish pressure remains on, and I think we are going up. Now there is a chance we are going to see this pair making also that kind of movement for us. There is a chance for that. But for me, as I said, I stay bullish only in my mind for the long run. So every time it does make the drop, that should be a good opportunity to go and look for buys. Next one on the list, dollar franc. As explained yesterday, 2 waves down, which we got, and we are after buys. Boom, boom, boom. Say no more. The breakout happened. The movement goes, and that's all. Our plan continues as originally said. And that brings me to the next one, euro franc, which is reaching to the extreme level we wanted, even more. And before you consider to sell, just remember that the extreme might happen anywhere between 116 to 117, and we don't sell before we get 2 false breaks. So we got one here, right, on that place, and that would be the only second one we have for a convergence, which only then we can sell the rallies. But most likely we will see this pair make something like that and recreating the setup for us later on. So don't rush, don't rush. That's exactly the situations I was talking about at the beginning. You see this opportunity, you see the level, like, oh, I'm gonna short because it's so extreme, it has to retrace, right? No. And trust me, I have been there. I did all these kind of mistakes during my trading life. Don't rush. Levels are good. Levels without setups and confirmations don't equal nothing. According to weekly, nothing bearish as for now. According to daily, nothing bearish as for now. According to 4-hour chart, divergence is just forming. Why to push the button too early? Make sense? Same with the euro dollar, which we have been following for a while, and now, well, we can easily say that this pair is dancing on extreme. It has the 261.8 of this cycle, and it's fighting it. Currently it looks like easy fight, right? But it's fighting it. We have a duplication of that level, also fighting it. We have the 4-hour chart cycle on the last leg, and the 161.8 of it. So you can see the importance of that level. We want to short it. That's daily 4-hour chart combo, not even weekly yet. So we need 2 false breaks on the 1-hour chart and convergence. Now, where do we get them? We got what's that? We got 1 false break right here. Second one to happen, same high, because between these two we don't have divergence. So it has to close below this high as well, and then and only then we would be looking for the lows to be broken to sell rallies. Okay, so that's the only scenario where we will be considering the sells. If that doesn't happen, well, in simple words, we have nothing to do. So let it happen before you trade it. Pound dollar reached the 132 we have been talking about for a while, and now it's creating for us a beautiful setup here on the 1-hour chart. One potential false break, second one forming and creating. So what we can do here is again wait for the last lows to be broken. That would be the ideal low, of course, and sell retraces from there. Shorter, because for long term most likely this pair will try the 136, maybe even higher. Keep in mind tomorrow there are news about the cash rate there and the latest vote. That might make it sensitive. I still for long run want to get buy dips, and I would go only with buy dips. But on the short term for scalpers, that's the only way to look for these sells, if at all. And that brings me to the pound yen, a pair that in my point of view only bullish. And for long run I wanted to 150, 151, maybe all the way to 155, 156. So for me it's only stay bullish. Currently we have double cycle to the upside, has some divergence, triple cycle on the 1 hour chart, 1, 2, 3. So that would be an ideal setup by tomorrow, if we can get that. And tomorrow, from this area, look for some kind of breakouts and a fly. That's an option. Of course, all my view is relevant only as long as this low holds. If this one is broken, game over for the current view. But as for now, while it does hold, it looks good, it looks correct, and that's the way to look to trade it. Next one on the list. Well, we have all the euros, but they all basically give us the same. Cat franc. 1, 2, 3, and 1, 2. Remember? 1, 2, 3, 1, 2. This is the two forming. It looks good, it looks correct. Once it formed, divergence completed. This is the trend line. Look to sell the breakout. We would expect another leg down to happen and to take us to below 76. So keep an eye on this one. It looks like a great potential to follow. Gold and silver, we have our setups from yesterday. We know what to do for sells. As long as it didn't happen, we cannot trade. And you can see these zigzags. Okay, there you can see the importance of where is gold here? You can see the importance of respecting the last lows to avoid all these zigzags. So stay tuned. That's all. And silver had this breakout, had the convergence principle, but on the same time it was bullish divergence, not even convergence. See that, guys? We need the lower lows for momentum, but it gave us just higher lows. So it's a divergence, not a convergence, which means no, not good, not for us. We don't want to trade such setups. Let's continue. Oil, well, you know my view. I said it yesterday, so for me it's only buy dips. Now indices. Well, how to read this one, right? Too tricky, too unreadable. This is a range, clear range, and we get stuck inside. So as for now, let's call it off. As long as we hold the range, I don't want to take part. If it will be broken, we can view that again, but I don't know. For me, it's only short, yeah? Sell tops range, definitely possible in the short term. But as per setups, per safe opportunity, there is none. And for conservative traders, there is nothing to do. Well, at least as for now. And let's continue. Canadian, triple cycle down. 1, 2, 3. We need 2 waves up, and we are after shorts. Remember that from yesterday? View did not change. 1, 2, breakout, sells. Same with the New Zealandian yen, which looks really good. By ideal, we need one more push to below that low here. We got 1, 2, 3, 1, 2, and we are after sell. Those of you who are sell from before, just hold it. There is no reason to get out. There are no warning signs. The only thing to do before such important events like the non-farm payrolls to come, break even. Why to stay risk, right? So you can, if you can risk free, do that. It's easiest way and the smartest way. So that will be all for now. Tomorrow is Thursday. We're gonna check the market again, see what's coming. And on Friday, non-farm payroll, so that would be the one that might be the decider for the coming period. On one of my previous weekly forecasts, I've been analyzing the dollar index, and I say that from my point of view, it's about to reach this bottom zone, and my view that on the coming weeks, this is exactly what's going to happen. It might take some time, don't get me wrong, it might take some time, 1, 2, 3, 4 more weeks to develop. On weekly cycles with daily cycles combination, it takes time. And you can see that 1 hour chart could look like zigzagging, daily chart would look like, take a look at the New Zealandian yen, okay? Just have a look on this chart. That's not tradable. But if you look on the daily charts, suddenly everything looks tradable, looks so simple, right? And it looks like, ooh, what a nice setup it was. That's exactly what I'm talking about. What you see on weekly and daily is clean, clear. What you deal with on the 4 hour and 1 hour is not. And driving crazy most of the traders. So you have to understand it takes time. And if you plan to trade the direction of the bigger time frames, you have to take it into consideration. That's all for today. Thank you very much for watching. I appreciate your time, and I'll see you again tomorrow.